So what an absolutely beautiful market condition it has been on gold, it has been on crypto, and a few other things. I've spoken with my team for months on end now about these moves. So you guys, part of the private team, know this. You know, this video is probably not going to be for you because you guys hear about this every single week. But this is more so for the people online. Right here on Bitcoin at 30,000 just in October of 2023, about half a year ago, 6 months ago, our screener, which is the mentfx screener, this one right here, we had more of the time frame selected, but for today's video, I'm going to use less. Actually, we'll use more. It's fine. It doesn't really matter. And we'll just add it to all symbols, and we'll just call it all. Save screener. Right, so about 6 months ago, Bitcoin US dollar hit our scan, mentfx style, and everything across the board here was showcasing around this kind of thing where everything was generally green. And at that point right here, this green circle, this red circle right here, is where we initially discussed with our team that Bitcoin US dollar was going to start a run to all-time new highs, very likely because of how trends work. And we spoke about how this would be the next level at which price would want to clear and likely go higher. We weren't sure completely about that, but as the move started, we had countless members take this higher, and it's been an absolutely beautiful market. Now today, we also are seeing the same thing happen with gold. This thing I've been bullish on for even longer, for an absolutely exuberant amount of time, since like multiple months now. Since back here when my mentorship was first like kind of like live. Actually my mentorship went first live like somewhere around here, very like even longer, I don't even know, like super long time ago. We were talking about the bullishness on this and how there would be times where of course we'd have to wait for opportunities to take this higher. And again, in or around these moments here, we can take a look right here. Gold transitioned. Well, right now it's starting to it's showing a little bit of bearishness, but that's okay, because again, this is not the end all be all. You know, we take the next step of looking at section 1 material and looking at structure to decide whether or not something, you know, if it's not lining up exactly, why that might be. But gold has also hit the scans on a very bullish level, and as a result, we've been looking at gold, at Bitcoin, and a few other things, but mainly gold and Bitcoin, and actually as well as that NAS. This has gone green since around, I'll show you guys. Yeah, so since around right here, NAS has gone fully green on our scanner, and since then we've been trading this thing higher and higher, and it's been the same story for everything. So NAS, gold, and Bitcoin has all been doing the same thing. And I just want to showcase how a few rules of staying out of price, of staying out of bad price, or of staying out of price when conditions are not met, a few rules around entering a trade, about walking away from a market when you've taken too many losses, can actually be built into a very profitable system relatively quickly if you're willing to follow a few ground rules and follow them clearly, right? So let's get right into it. So for today's video, we're actually going to do like a fun little game. We're going to decide what time frame we're going to be trading. So it's going to be between a 1 minute, a 5 minute, and a 15 minute. Okay, so very simply, this is going to be 1, 2, 3. Based on the number we get, we will create a system around that time frame to prove, one, that time frames don't matter, and at the end of the day, all we're doing is executing a principle, a concept to the markets, and we can use multiple things to execute that concept, but at the same time to show all of you that as you get better at this, that you can scale, and that you're not limited, like many mentorships limit you, to any one way of thinking or any one way of trading, which is a very, very powerful thing. So what I'm going to do is I'm going to press and click new tab. I'm going to do random number between 1 and 3. Click. And we're going to press generate. And we get the number 1. Okay, so for today's video, we'll be using a system that we'll be trading on a 1 minute chart. It's going to be as simple as that. And now we're also going to look at like, I don't know, I want to be able to get more choppy price action too, right? So there's about, here, we'll take all of this. So about 150 days. So we're just gonna go random number between 1 and 150. But we need a few days, right? Because we don't know if there's gonna be clear price or not. So we'll go between basically like 50 or like 30 and 150. Enter. And we're going to press generate just like we did before. So we get 127. So we're just going to go right here and we're going to go 120. Here, I'm actually going to do this for you guys. Oops. We're going to go to settings. Go like this. Okay, cool. We're going to go like this and go 127, which is right here, just like that. We're going to go back 127, just like that. Very, very simple. Here we have it. And we are going to throw everything back on. Now, everything that you see on my chart in relation to these specific ranges, right? These are the mentfx structure ranges just based on a very simple rule that I've taught forever. I teach in the mentorship. So it's not like some hidden thing. I've just coded it and made it very simple for everyone to see. So that's that. The MAs, they come right with the mentfx structure premium indicator. So you have a few options here. You can play around with this to make it look the way you want it to. You have an ATR value. We can even throw that on. It'll be like down here. Yeah. And you can throw that on as you see fit, and you can change around the colors. And then down here, you have the ATR as well as the model, the ad hand model, which is what you see right here. These are those models, right? So at the time of around this point here, October 2023 or so, the screener itself, the mentfx screener, which is available as a tool since we're building out a software, and I have a few software developers working on making an even better tool for everyone that's a part of our thing, and maybe even as its own company, because there's a lot of work of man hours and people that go into it. But this has been showing general bullishness across the board. Now, if you're not a premium subscriber, all you have to do is go to more and click on sentiment viewer. We can actually make it black too. Yeah, very cool. You can go to more and click sentiment viewer, and within sentiment viewer, if we just look up gold, you can see, I mean, right now, of course, intraday, it's pretty red, but for the most part, on the higher time frames, it's retained a very bullish institutional sentiment. So as a result, of course, you could already come into this from some of my older videos, like the mentfx premium trading plan, and just use that as a starting point to understand that, hey, this market's bullish. Now, let's go into the full analysis of how you would conduct this game. So because we've landed on the 1 minute as our main entry time frame, I'm now going to use a few things that I've taught privately and haven't yet made videos on publicly. So this should be very helpful to a lot of you that don't know what kind of time frames to work with. So when you have a time frame of entry, in this case the 1 minute, you use a rule of 4 to 6, which I'll make a video on, but you simply use a rule of 4 to 6 to judge a validation time frame. So that means you could use from 4 minutes to 6 minutes. Anything around that, or even like a 10-minute is fine. You can kind of anywhere in that ballpark is perfectly fine. So for today's video, we'll just use a 6 minute, just because why not? It seems fun. So we'll use a 6 minute. We can use a few others, it's fine. And then for this time frame, which is our higher time frame, we simply use a rule of 30 to 60. So you want to use like a 30-minute up to a 60-minute. And again, you could play around with this and go even larger. You can go to a 4-hour, a 2-hour, even a daily. And theoretically, the better you get at this, the more you understand how to actually make timeframes work for you. But if you're brand new, this is a phenomenal and easy way to get started. So for today's video, the main focus of context, of looking at the markets, of looking at whether or not we even have an opportunity for an entry and if we should be following it, is going to be to analyze the 60-minute chart, which will be the hourly chart, to analyze the corresponding 6-minute chart, and then to analyze and go to the 1 minute for actual execution. And for the for today's execution, all we're doing is we're going to be following the ICI buy stop model, and buy stop because we're bullish. And that's simply a model that I've developed. It is a conglomerate of all the things that I teach privately. So all you're doing is you're basically looking for a setup along these lines, and you're buy stopping this high with your stop loss either very, very tight and looking for big upside reward, protecting this low or this low based on who you are. And for today's video, I'm going to be using tighter ones to show you that even with well, actually, I don't know how this video is going to end up. If it ends up being all losses, I'll still upload it. I don't really care, because this channel has from the beginning been about showing you guys what it looks like to be a trader. And sometimes even when you're correct about direction or you're anticipating the right thing, you can still take losses, and it's part of the game and you get very good. But again, like I've done in other public videos, we're going to assume that we're trading a mentfunding evaluation. So we're just going to assume that we're trading a mentfunding evaluation. We're just going to assume we're trading a simple, let's do $1 million account. So we simply have a max loss of 6%, and we have a profit target of 10%, and that's all. Okay, so we bought the account, we're good to go. We're looking at gold in this case, and we're looking to trade it. And for today's video, we will be using, again, 1% risk. Likely, I'm not even going to use a 1 to 3. We're just going to be using 1% risk, fast break evens, manage using MBs, which is actually just using structure, and you're going to see that. So simply for today's example, right, this is the ICI, which is when you buy stop right here, right? This is what the ICI is like on its own. This is what it looks like in regards to the kind of setups I usually look for, because then you have what we call the clouds of liquidity, right? This is how markets move across multiple timeframes. It's one of the reasons that we were anticipating the run on the next high since the first high, right? This is the institutional structure of this move. So the expectation is to run this because everybody is shorting this market. And of course, at the same time, you have a few things pointing. So I don't use the sentiment, I just use the screener. You have a few things pointing to the fact that this market wants to be very bullish. Okay, so that's very important. So that's the system we're going to be using today to showcasing that if you have a few concrete rules, that you can take edge out of the market through simple risk management and a trend template. So like I said, we're going to start with a 60-minute. That's going to be our 1 hour chart. And we're going to start right then and there, and we're going to keep track of our progress. So first and foremost, as we look at the hourly here, there are 3 main things that I look for. 1 is the institutional structure. 2 is the models. 3 is the MAs, okay? And these, I mean, these are in no order of importance. These are all important in their own sense, okay? So first things first is institutionally, we can see we're clearly moving not in a sideways market, and instead we are moving in an upwards moving market, right? Clearly from some kind of low to some kind of large high to the expectancy that maybe this is the next low and we want to see new highs. But overall, there's a clear dead set direction at the moment of simple bullishness. On top of that, we have MAs that continue to expand and contract, expand and contract, expand and contract, in or around, expand and contract to the top side. At the same time, if you look right here at the bottom right, you're in an accumulation model. Now, those of you that are private students, you guys know exactly why this is an accumulation model, but very simply, as structurally, the ranges that are being created, as they move higher and then they break down, but then break back up, break back down, break back up, break back down, and then break back up. When you have a multi-fold back and forth environment, you can anticipate with the most recent break what direction price is moving in. So partnered with the 3 things, which is institutional structure, the MAs, as well as the overall movement, this market is pointing to the fact that it wants to move higher and clear the next high. So, you have what you normally have, at least from the way we think, is that you have infinite amounts of people that are trying to get short for whatever reasons, imbalances, random zones here, random support resistance. It doesn't really matter. That's how markets function, right? And on the higher time frame, the next question I ask myself usually is, does this market have the capacity or the reason to continue moving forward? And in this case, it does, right? So usually the way markets move is they'll go sideways and then expand. They'll go sideways and then expand. They'll go sideways and then potentially expand. They'll go sideways and then they'll expand. They'll go sideways, which is what it's kind of doing now, and then they'll expand. Right now, from a standpoint of MAs, we are clearly in a potentially expansionary move, which is good because that lines up with everything we're looking for. Our screener has shown that this market's already bullish. It's showcasing that bullishness. We have multiple things indicating that this wants to move bullish, and our higher time frame is indicating that there's nothing out of the ordinary here. Price isn't phenomenally above everything. Price is not in some weird area. So overall, bullishness is present, which is all we need. So we'll step down now to our 6-minute, which is our time frame of validation. So this is the time frame that actually decides when it's even time to head to a lower one. And it's very important that we use this one because, in the scenario that we don't, well, if we're trading all this price action, like here, for instance, on a 1 minute, there's a very high chance that we take many losses. A lot of traders take infinite losses, and the reason they never find profitability is because they're taking many trades in random areas. So as a result, if you're taking many trades in random areas, your results are going to be randomized. You need to get used to moments in time that price tends to move. And one of those moments, so instead of just sitting here and telling you that, like many mentors would, I'll tell you the exact kind of moments that happens in. The exact kind of moments are ones that are coming out of sideways action to move higher, just like we just saw in a higher time frame, which can be defined by price, for instance, making its way back to a clearly moving higher MA. And then with our anticipation of moving higher, we can come down to our actual timeframes of entry and use these moments to enter. And you would simply use the same template for your given time frame or your given system. You can do this on a monthly, on a daily, on a weekly, whatever it is that you want. So before we proceed, the first thing is to, again, go through the steps. Now, when I look at this and I zoom out, we actually are kind of range bound in a larger area, which is important to consider because when you're range bound for a longer period of time, any orders that come into the market are likely to be, well, just go back and forth, which means that if you're taking entries and you're looking for entries that then start making runners, you're going to take more losses rather than wins, of course, because if you're continuously entering in a market that's going sideways, you are going to be on the sad and receiving end of that. Now, institutionally, if we were to try to pinpoint, how is institutionally this market moving and does it have the reasoning to keep going? I would say it does, right? It still has and carries this institutional structure that wants to continue moving long, which is important. And we can qualify that further down by looking at the actual models. So as we zoom further in, we notice that we were actually more range bound inside of like kind of this area. And we've recently actually just come out of it. We've clearly pushed higher. So whatever was present here, another intermediary form of institutional structure is also present to the long side. And at the same time, right, if you look down here, we are existing in an accumulation. So again, same thing, price going back and forth, breaking higher and breaking higher. But even though all of that is present, take a look at the actual interaction of price with the moving averages here. When you have interaction of price at this level, that instantly shows me that there is indecision in the market. The way that orders are coming into this market on average is not clear. The way that orders are entering this market is not pointing to the fact that it wants to go in any direction. It's actually pointing to the fact that it wants to go sideways, up and down. So at this given point in time, I wouldn't even consider looking at a 1 minute because the market is telling you firsthand that it's not ready to make a decision in terms of where it wants to move, even though everything is pointing to the fact that it's bullish and it wants to make a run on this and then maybe even higher. So already you're seeing firsthand, just at this example right here, that every moment of time that you analyze something is not a moment to trade. And once you've realized that, well, you are going to transform everything you do. So we're just going to play price. We're going to let it do whatever it needs to do because we've now established ways to stay out of shit action. And notice what would happen if you were taking trades here on a lower time frame or on any time frame. You would be consistently taking losses back and forth and not knowing what's going on, right? So we'll wait for a criteria or a moment in time that's clear. Now you can see institutionally, price is still chosen to hold an important low or a bigger institutional low, or even this one if that's the one you want to use. It really doesn't matter, while still remaining in reaccumulation. So price is breaking down, then breaking back up. And now what you're seeing is, if you notice the difference in the moving averages from here to here, you now have averages that are moving in a clearer, more precise way, which means that the orders that are entering this market at this moment in time are entering what I like to call with more conviction. So whatever orders are entering there, whether it be big money, smart money, bank money, hedge money, it doesn't really matter. Any of that money, it's entering in a smart way. It is consistently entering where it should and grabbing up all the orders of the people that don't know what's going on, of likely sellers. So even though we don't know if this is going to keep going long now or come down, the thing that's going off in my head already is that almost everybody that's watching this for a sell, looking for this for a sell, looking for this head and shoulders as a sell, anything up here as a sell, all those people are being absorbed right now by a ton of smart money. This is where that absorption of big money is happening. So in that scenario, at the same time, you are now hitting price on rising moving averages. So the anticipation is that price can easily begin to move higher, right? Which means that you're coming out of what we like to call the consolidation into, of course, the start of a stage 2 of this time frame, which provides an ample opportunity for us on a 1 minute to start entering, because that could kickstart a move higher. So this is a moment where I would draw out the anticipation of where price could move, just like this. I usually just draw it out like that because I like to visualize and see it when I go to a lower time frame. And as I go to my 1 minute, which is our entry time frame now, I know what I'm looking for if price even sets up. So first things first, before we start analyzing, we need to conduct the same kind of analysis we just looked over, right? Institutionally, price in some sense has moved higher, has created like this need to go higher, has actually gone higher, so it can easily keep moving on this path. Nothing is stopping it from doing so. That's all good. Secondly, if we look down here, price actually notes that it's in a redistribution, an unconfirmed one, but still a redistribution nonetheless. And it's correct, right? This is a redistribution. However, the type of redistribution matters, and the way in which price moves can change the model at hand. What I mean by that is the fact that this broke up made this redistribution and made it likely to come down, and that's fine. But the fact that this broke up and broke above every high that was previously created and broke beyond this one institutionally, that has in itself transformed this model into an accumulation. So even though this might be pointing red, at this moment in time, it's still clear that the price action of this move still wants to move higher, which is great because that means that we might have an opportunity for a trade. MA-wise, they are not extremely choppy. They aren't doing something out of the ordinary or look very unclear. They clearly expand higher, contract, expand higher, contract, contract downwards, and now expand higher, contract. So we can easily expect it to expand higher and then contract later, and then hopefully we're in a trade and manage well enough to continue a move if it wants to come. And notice how after all this analysis, price can simply just fail down and I'll have no trade to take. And it'll be as easy as that. And I would have, stayed out of bad action. So now comes the criteria, right? The criteria for my entries is what I like to call the ICI, right? I'm looking for a clear ICI along these lines, and if I don't see it, I simply don't trade. And if I do see it, then I simply trade. Or if I see it and it's not clear, I simply don't trade. Or if price runs without me, I simply don't care, right? These are a lot of the lessons that you would have learned and you've seen in my mentfx premium trade plan that's available for free on this channel. So if you haven't seen it yet, go check it out. So, at any given point, this setup is actually happening a lot of the time, right? So like even if I look at this, theoretically, this is that setup, right? If I buy stopped right now. Now, there are going to be reasons, especially as you get better at doing this, as you start taking photos and collecting data, as to why you may not take a trade. In this specific scenario, the fact that we've had multiple wicks and multiple higher moving prices, and the fact that we're kind of range bound in this little random area instantly turns me away from buy stopping this. The fact that we have choppy MAs right here, and the fact that they're diverging, or like going across from each other and going all over the place, is one of the reasons that I wouldn't buy stop this. There are many reasons why I don't take things, and I personally teach these and show these every single week when I do take trades. But you need to recognize that just because this looks like it's present, it does not mean that it's a good trade. It's a very important thing to remember, and this is true for any pattern that you might be trading or any pattern that you're doing, because on top of all that comes context, comes the testing. So I'm not going to touch this yet. But if this price can come up higher, right? Because what I'm really looking for is any setup that can happen kind of at or below this high. So, here, maybe up here, even down here, is going to be a phenomenal entry. So if price can basically make its way up, go sideways, I will happily take a long here to continue this move higher in conjunction with this ICI, right? And you can see very simply how this lines up directly with the kind of setup that I am teaching you, right? And you can see that if I draw that out now, that in itself is the exact setup that I told you at the beginning of this that I'll be trading and looking for. And again, like I said, I'm going to be using a 1% risk within the guidelines of the ment funding evaluation to see whether we would lose or pass or whatever it might be. So let's see if we can get a trade. And notice how I don't have to sit here the way a lot of mentors do and do like some random stuff everywhere trying to guess and do this guesswork. All I have to do is look for specific things that are expected in reference to how trends move and get involved if they happen. Otherwise, look at this, right? We just spent an entire trading session or 50 minutes doing nothing. That is trading. When you start realizing that's what trading actually is, regardless of the time frame you're on, that's when you start making true money and real money, because at that point you've disconnected from this need to constantly be in the market, and instead you're looking for specific moments where price is actually moving in a way that's worth being bought for you. So nothing's happening. I'm going to head back over to a 6 minute. I'm going to also keep track of where we started trading just to show you. Actually, we started looking at this like back here, right? And you can see how much price action we've already avoided, right? We've already avoided like 16 hours. So over a day of price action was avoided, and you guys will be you know, if you're new, this is crazy, but if you're not new, then you all understand this. This is not something that's out of the ordinary. And you can see the MAs are now rolling back over to the downside, and all of a sudden, price is now in a not so clear accumulation as it starts moving lower, right? So right now we'd just be waiting on the sidelines because there's nothing to touch. And you can see it rolls over into, if you look at the bottom right here, there's a distribution. Now, personally, why am I not following the fact that it's a distribution? Well, because we did the work prior to understand what is this market telling us? What has it been telling us, right? This is why I brought your attention to Bitcoin, to NAS, and to gold before I started this, because I wanted to show you guys that for the last 3 to 6 months, even more than that, we've been talking about with the team, and it's all recorded prior to ever happening, so you guys can go, you know, join the community and check it out. And even if you don't want to check it out, you at least just get the screener and you get access to our tools, which is awesome, right? You'll get to see firsthand how these things were spoken about way before they ever happened, about how trends function, and then you get to see them deliver. So notice how just because it enters distribution does not mean I'm sitting here looking for sells, because the work was done beforehand. I know what I'm looking for and what I'm waiting for. If I show up to the charts and it's not happening, there's no reason for me to take trades or touch anything on the market. And you can see it starts coming down into clear distribution and just falls off. So I can head back over to my higher time frame now, because, you know, this is no longer in any functional or clear market, and you can see it actually re-enters now redistribution, and I simply can wait on the sidelines until this re-enters accumulation, right? So this is where weeks can go by, months can go by without you touching this independent pair, or, you know, days, whatever, based on the time frames you trade, and that's fine. That's part of the game, and when you realize that, you are so set, because then you stop focusing on markets, you start focusing on context, and when you do that, oh God, it's over for everybody, right? You're gonna do very well for yourself. So again, we enter like this longer term distribution or this longer term institutional leg. Oops. Okay, well, it doesn't matter, right? We can miss moves too. You can see as we enter this longer term institutional leg that might still be part of a bullish bias, of course, notice how it was not met with taking any trades or any losses. This is what people get wrong. People are always like, how do you predict the next leg? Where's it going to be? Where's it going to end? How do I stop taking losses on the downside? This is how, right? Instead of sitting there thinking that you need to constantly be trading in these moments on these lower time frames to catch that next low, you can simply wait for the market to show its hand. The market will show you when it's ready to go bullish. So at the moment, you can see what we have is a very similar moment now as to what we had earlier. So again, price is still institutionally moving potentially bullish, of course. At the same time, down here, it's in redistribution, but again, remember, what kind of redistribution is it? Price came down, breaking upwards once, breaking back downwards, breaking upwards twice, and when it broke upwards, it broke above this specific high right here. So again, in a minor institutional structure, it has set itself in motion for hopefully a new market condition that wants to move higher now. And that's phenomenal to see. So in this moment here, I can step down to my 6 minute, which will be my validation time frame, to see if there's even going to be an opportunity from a standpoint of the same conditions to take a trade. So as we make our way over here, right, again, institutionally, yes, we're breaking bullish and we're clearly moving bullish. This is insanely bullish. And at the same time, you have the exact footprint of what we look for. The MAs are expanding and contracting, expanding and contracting. These are setting up beautiful opportunities already. We missed them because I played price too fast, but that's fine. Notice how even if I miss trades, it's all right because I can show up any day and do this if my criteria is met. So you are being shown firsthand that money's entering this in a very clear sense. And currently, as price moves higher and goes sideways again, we can, of course, right, sideways moves. We can anticipate the next move. And theoretically, there should be an opportunity that wants to take us higher now because, well, the averages are proving that price wants to move long. So if I head back down to my 1 minute chart, right, I can now once again start doing my proper analysis for the day. Or for the specific session. So currently you can see we are in a range that's bullish from there to there. At the same time though, we spent a very long time in this range. However, how and where did we spend time in that range? It instantly comes down and goes sideways for a very long time until coming out of whatever this was to the top side. So right now you're on what I call, let's say, the right side of the V, right? You're on the right hand side of price. And there's no stoppage to it, right? Institutionally, you have the ability to keep moving on this. So theoretically right now, if I can find an opportunity along these lines, I don't see why I can't take it, okay? So this is the high again that I kind of want to keep an eye on. I want to see an ICI set up kind of, you know, inside of this area here, maybe a little bit higher, maybe right around that area should be very good, and hopefully get into a trade. So let's see if we can do that based on one of these ICI based setups. Now already, again, at any given point you can draw this, right? You have this kind of move here, right? There it is. That is an ICI move in itself. Now personally, I want to wait for smaller ones, because if a smaller one occurs, for instance, like here, right, that's going to provide a better risk appetite for the reward. But it's up to you. Some of you might already be willing to take this long off of this ICI, and that's fine. Personally, I'm not, so I'm going to wait for a clearer setup in regards to the MAs and the way that everything's moving, okay? So price starts coming up along the right-hand side, same thing here, and you can see it pauses, and it creates this high, which is actually now just in reference to this high. So because these are so close, I will actually opt for the higher one, which is gonna be this one right here. So that's step one, which is perfectly fine. So I'm happy to set up a buy stop. And again, like I said, I'm looking for protection. So if I'm having a setup, I'm looking to protect in a very shallow way on the downside, because that allows for my upside to be significantly larger. This is how you get higher RR if your system is built around that. But it also means that you're going to be taking more losses and break evens when you do take trades, right? So for the sake of today's video, because I want, well, I'll just throw it under the last time there was like kind of sideways action. I could, you could throw it down here, it's perfectly fine, but I'll just throw it down inside of this area here, just under the up candle right here, and we'll go with that. So let's see if we even get tapped in. Okay, so price does tap us in. Now, if it does tap us out, we can still be fully correct about this move. And we might actually retake it because of the fact that we are looking at smaller risk profiles with tighter stops. So of course we can do that. Yeah, so there we go, we get tapped out. Now again, the person that protects this low might not be tapped out, but that's okay. So right now we're gonna record this, -1% on our account, right? So again, same thing goes, right? You're setting up this ICI, which is still a very clean ICI inside of this area. And again, I want to take it, but again, I want to create clean risk profiles where I'm risking very little in regards to my 1%, to make a lot more very quickly, right? So that's all the risk approach is doing here. So we do get tapped in again, phenomenal, within the area we expect price to hopefully create a move from. And now we're looking for a reason to and a way to break even on this. So what I'm looking for is as price moves away, there, okay, so it does move away. I want to quickly break even on this because now I've taken all my risk off the table. So there we are, we're in a trade and all the risk is off the table. Now for the sake of today's management, right, the management tool that we're going to be using is actually going to be the indicator itself, but we can prorate it to a lower time frame, but I don't know if going to a lower time frame works right now. So actually, you know what, we're going to use it on a 1 minute. So we're not even going to do anything. We simply will manage to break even and allow the tool itself to manage the positions for us, unless you get insane moves. So I'll just wait. So even if this comes back now to break even, that's fine. Just to show you guys something, we just went 5% into profit right now. Based on your personal risk strategies, based on if you look at the mentfx premium trade plan, like where I tell you guys to focus on like a 1 to 3, this is already a win, and you're up 2%. Now personally, I'm going to use the other risk. I'm just going to use a different management style this time, because if this comes back to break even, you get to see firsthand that even big floating profits does not mean that you're doing something wrong when they become break evens. It's actually very normal based on what your system is. So like I said, today, the way that we'll be managing is going to be based off of structural lows. So we want to see price at least create some kind of structure, and as it does that, we can then manage. If it does not do so, there's nothing we're going to do, and we're just going to let prices break even and take us out, right? And that's fine. It's perfectly fine. Just like that, right? So just like that, we've actually taken a break even on a trade that ran what, like 5.8 RR, and that's fine. I want a lot of you to realize that based on what your system says, you need to follow its rules, or you won't make money in the long run, right? So there we go, perfectly fine. We'll head back over to the 6 minute and just take a look at where we are. So again, like the 6 minute is still in a very clear moving accumulation, still wants to move higher. Nothing is stopping it from wanting to move higher. So we can simply expect that this kind of moment can easily occur again. So let's go take advantage of that if it does want to occur, right? Accumulation is still clearly present here. Price is doing the interaction between the MAs. So again, if we can start some kind of clear up move or some clear ICI based setup on the upside of price, just like this, right? We can enter even right now. I'm just going to enter on the candle as is because again, it is moving long. I would have entered right here, just so you guys know, but I personally just played it too quickly. So for the purpose of the video, I'll just do it this way. I will create a tighter risk appetite for myself personally to have higher upside. And again, right, in expectation of the move higher, because again, what is the entry based off? It's based off this ICI occurring right here. Now you might notice that when I draw it or draw it out, it doesn't look as clean as some of the other ones. So those might be factors that stop you from taking certain trades. But we're going to take that one and allow this one to do whatever it wants to do now. So again, if it starts going into instant profit here, like maybe around here, we'll break even. Again, just letting it to come into some kind of strength before. Okay, so clear strength comes in, we'll simply move the trade to break even. Stop loss right here. And now again, I'm just going to play it until it loses or breaks even, because all we're doing is we're managing with the mentfx low. So there's a low here and there's another low here. So all I'm going to do right now is nothing, right? Because the rule that I've taught in the mentorship for a lot of people for their management rules for trailing is to use this second one as a stop. Right now, that's under the break-even point, so there's nothing for me to do until this price hopefully starts a larger trend. So you can notice this system that I'm showing you today, this trend template, is one that's going to be based for people that want to be in larger moves, right? Of course, some of you might be happy already with the fact this won to 2.5, and that might be your profit. But again, for the sake of today's video, that's not the kind of moves I'm looking for, so we're going to be consistent with what we'd look for. Now again, in this case, we can move our stop here, but the opportunity gain, the reward here is not worth the potential break even instead, because price can easily, again, tap below and go. So in this scenario, we are not going to bring the stop up until there's a clear and nicer area to move the stop to. So we're just going to keep playing it. Right, we get stopped out at break even again. So we're gonna go ahead and record that. That's 3 trades now, 2 break evens, 1 loss. Let's move that over again, make that smaller. Right, now again, we're gonna take a look at our 6 minute to make sure that we are still in a criteria that is still worth trading and still makes sense that price can deliver, and it does, right? Price is still moving in a very clear way. It's unlucky that we weren't able to position ourselves during these clear ways, but it's still an accumulation. The models are still in accumulation, the market's still in accumulation, and it still has the ability to continue moving higher due to where it is right now in price. So we have no reason that we can't continue to watch during our given session for an opportunity if it wants to present itself, right? So we're just looking for an ICI that wants to present itself now on the way up, and that's exactly what we get. So again, this is going to be a buy stop right here through that high, protecting some of the low and looking for the higher RR. So we get tapped in. Now we're looking for a reason to break even. We don't get that reason to break even, and instead we actually just take another loss. So check this out, right? We've already taken 4 trades on this account. We're down 2% on our overall account, right? And you shouldn't ever be worried about that, especially if you're trading a funded account or like a prop firm account where the risk is no longer yours once you're actually funded. But also recognizing that your risk is a lot higher because of the fact that you don't have, you're only 6% max loss. If you had 100% of your account, this is even easier to stomach, right? I've stomached, drawdowns of 20% with no issue whatsoever, and it's going to be very normal. So we'll continue to wait for opportunities where price wants to set up an ICI to the top side with the MA still moving clearly, which they are right now, and hopefully this moves to accumulation and we can continue to clear new highs. Let's see if we get that. So price pushes up nicely, and it does create this intermediary high that we can buy stop as part of the ICI. Again, if I was to try to draw it out for you, here is one right here, and you can see it actually looks really clean if I draw it. So again, that might be something that's even part of your system. If you draw it and it's clean in regards to what you're used to seeing, then that can be an opportunity that's worth taking for you. Now, as I look at this, right, you have MAs that are contracting and expanding, which is fine. You don't have any other high except this one and this one that's in the way, which means that, the supply that might exist is here. So entering here won't stop anything randomly. So I'll be happy to take another long here, protecting, again, a small portion of whatever this pullback was and looking to take it higher. So we do get tapped in. Again, we're looking for a move to break even, right? Because a normal pullback is usually normal. And then I kind of want to see it move away just like that. And now I can break even on this move very simply, okay? So I will move to break even now. And again, we're in that same moment where, great, another trade has paid for itself. Well, it hasn't paid for itself because we haven't taken partials, and we're not taking partials for today's video. And again, some of you, as you're watching this, should see that, you know, some of these trades, based on the way in which you're taking partials, have completely different, will have completely different results, right? But you should also see that you can make the market work for you in that sense, right? So this is the trade that we should have been taking, but I wanted to be honest with you all in the video, so we just took the one that's higher up. Now we're in this one right here, okay? So once again, we're just waiting for the rules to be met. All I'm waiting for is a low to get updated so I can move to the next low after it. Otherwise, I get to take another break even and call it a day, because that's what trading is. And trading is literally just doing that on repeat, okay? Oh, is this another break even? It sure looks like it, right? Oh, not yet. Have it break even now? Oh, not yet. Okay, cool. And now look what's happening. If you weren't in this trade now, you're getting another opportunity, right? Right around through this high or right around through this high. If you notice that, okay? Those of you watching right now. Okay, so we take another break even. There we go. Easy as that. And again, we return to our validation time frame to decide on whether or not this market's worth using now. And now, as it's failing below its 20 and 50, we understand that we were likely entering a longer term stage one. So there's no reason to now touch this market. I want to wait until this shows me that there is some kind of willingness on the buyer's end to step in. And you can see we have a red news event, right? Simply stay out of it because, again, no rules are met. And you know how many people lost money in this? Tons, right? But we're not here to trade red news because we're not dumb traders. And you can see now we have a fall off in price, which is fine. We can step back up to our hourly and we can take a look at where we are. So we understand we are, again, multiple trends are happening at once. And as long as they are clear, there's no reason we can't continue to trade them. So the 1 hour is still fine. The 6 minute has entered a reaccumulation with downward sloping MAs. So we can now simply wait for it to come out of whatever this is. And it can even stay in this sideways action for a long time now. And we won't take any additional losses, which is a very, very powerful thing. A powerful thing that a lot of people undermine, right? So you can see we are still in reaccumulation. We come down, right? The MAs are, they're somewhat okay, but right now, I mean, I would not trade anything. I want to see price start coming up again alongside this side. The MAs start sloping up, and then we can consider trades up and around those higher areas. Otherwise, there's really not much to touch here. Right, so just like that, it starts coming up, starts kind of going sideways, which is exactly what we want to see. And we can expect now, once again, based on the fact that we're going sideways and price is moving sideways to moves, we can expect something along these lines if it was to come. So in this scenario, on this given trading day, whenever this might have been this trading session, we can take a look and see if we get an opportunity to actually take another entry. Again, right, you have a accumulation model, but it's still under whatever this push was, which is kind of important to consider. However, it has come out of whatever this large, like inside push was, and currently you can see the models in terms of the gray breaks, they are to the top side, which is really good. There is very clear expansion and contraction going on now. So if we can get some kind of clear sideways action here, I'd have no problem taking this trade, right? So just, okay, there we go. Fantastic, right? So we can take this trade, again, protect something on the downside. So again, all I'm looking for is when I'm taking a trade, right? When I'm taking a trade, I'm just looking to protect some of the downside to make more on the upside. And I'm doing that over and over again. And that does mean I'm going to get wicked out sometimes, and that's fine by me because I'm aware that over time, this way of trading will make me money. And what's cool is if you're doing the same kind of back testing for yourself, right? You might notice that taking a lower risk is much smarter for you because your system is literally oriented around looking for and trying to catch larger runners, which means you're going to be taking a lot of break evens and potentially more -1s. So we wait. This trade is still perfectly fine. It still looks clear in terms of the entry. So we'll just see if we can get an entry on this. We'll even tighten this up now. Yeah, going nice and sideways, right? So you can see now it's starting to set up like this little inside area here, but this one's just above it, so we'll still use that one, right? So we're just waiting for that to get tapped in. We'll just protect some of this downside right here, and we'll look for the upside if we get tapped in. We do. So again, give it a little bit of time to play around, let it move away, let it have a natural kind of pullback if it needs to. That's kind of what happens with a lot of prices. There's kind of that natural pullback. Now let it extend away from price, because again, we are trend followers. So when you do that and you're looking for longer term trends, you need to give price the chance to digest its initial move, which is exactly what we're doing here. So let it digest the move, let it start making a move just like this, and then you can move to break even, right? Because again, if you're entering into trends, natural corrections, natural higher highs, higher lows are going to happen. Now we get to move to break even, and right now we don't have a way to move this higher, so there's nothing we can do. But something that we will do, that we'll keep in mind, is because it's a ment funding evaluation and our profit target is 10%, we know that if we target just over 12, just like this, to take account into some commissions, this should be a pass. So in the case that there's like, if this just takes off, then of course we'll just close here for the gain, which could also be a rule for you. Close at 10 RR could be your entire rule if you're happy with it. But for the sake of the fact that the video is about passing a ment funding evaluation, of course, I'm just gonna do it like that, okay? You know what? No, I'm not. I'm just gonna be even more fair and just show you guys that you can follow normal trends and make money, okay? Fuck it. So again, I'm waiting for a new, there we go. Okay, so now as you can see here, right, price makes a low here by the mentfx structure indicator, and the prior one is here, which is great because now we can move our stop up here, and we finally, and you can move it right to the low or a little bit below based on what you want. Usually I go a little bit below, just like this, to account for some form of absorption, because it does and can happen. So yeah, and we'll just keep doing that now. Okay, so we'll move it again, right? We're simply just moving it so you can see as a new low updates, right? You can see this up line and it updates, we just move it to the prior low, because the reason we do that is because since we want to be in trends, we can allow for some kind of down moves before the up moves, right? That's what we're looking for. Okay. So again, this is institutional based structure, right? You can see how institutionally we are moving in this higher high, higher low format. And we're looking to protect ourselves in a way that's going to hopefully allow us to live through that drawdown, so that as prices move higher, you can see there's a new low, we can move it to this low, and then you can see there's a new low, so we can move it to this low. As prices move higher, oh, actually this looks like it is about to be a pass if we were using that kind of criteria, but that's okay. So we'll wait for this now. Looks like it's okay, cool. So it takes us out at this stop right here for a gain of 6.89. So we're gonna record that, 6.89. There we go. So now we're up like a very good amount, about 4% we're up on our accounts, which is amazing. And we just return to doing the exact same thing again, right? The 6 minute is clearly still in that accumulation and still moving in accumulation, and has no reason that it can't extend now and start a new accumulation, right? So given the fact that that is present, we can continue to watch our 1 minute during our given sessions for the continuation of these exact kind of moves. And notice kind of how this move happened in regards to what I drew. Did I do this in hindsight? Did I figure out where it was going? Or do I simply, and have I simply done a lot of the work to understand how trends develop? That's for you to answer. Okay. So price enters redistribution, we can see down here. So of course, even though the higher time frame is fine, there's nothing for us to touch here yet. And you can see it enters longer term redistribution. So we're just waiting now. There's nothing for us to trade. We don't have to be traders during times where we're uncertain, and most people are going to lose money because they start taking random trades to random sides of the market for no reason other than the fact that they want to make more money faster. And then we have a clear break higher, and even though it says redistribution, it's clearly in accumulation now. So 6 minute would also be in clear accumulation. So we're going to stock for entries now. Now, I didn't personally find this entry. If you did, then good for you. But I missed trades as well, and we'll just continue as is and let this set up into a new setup if it wants to have one. And if it does, then it'll show us that, right? So this is the first time we're coming out of the 2050, which is important to consider. And now we're getting this sideways action up here, and we're creating again, right? We're creating the ICI. So again, there's no reason that we can't look for a long through the high with a protection of some of the low to look to take it to the top side. Now we wait. Now, based on a few rules like how the MAs look at the time, you may cancel or not take a trade. So personally, when I see this kind of thing happen, I usually don't like the trade because you can see when I take the trade, it's usually when price is interacting with the MAs for a little while and they're not just straight up like this. So I'm actually going to cancel this. Even if it ends up working, it doesn't matter to me because you have rules that are built around your specific criteria, right? So I'm going to skip it. And you can see that, yeah, it might even work out, but that's okay. Part of trading is recognizing that there's going to be moves that work out and that you're not in. But then when price starts interacting and moving in a way that you're now used to, this is where you as a trader are going to step in and have your edge play out, right? These are exactly those kind of moments. I hope this holds up. That is just beautiful. Now again, remember, this can still come back for an easy loss. Please don't forget that. You know, because our rules so far have been when we get into a trade, we allow the natural reaction or whatever it is to happen, and then as it moves higher, we can move to break even because we're aware that we're looking for the longer institutional legs of higher time frames and even of the lower time frames, right? Because notice this, right? We are looking to hopefully take this longer leg, right? So we want to get in it and position in a way where even if it comes back, we still can be in that move as it continues. Now, what I want to keep your attention on is if we're up for our R right now, right? If price were to simply come up here, that would be a pass of the mentfunding evaluation. Now, if that happens, I'll still keep making the video to show you that we can get to 10 just with trailing and with using our real rules. But I want to showcase to you all that, you know, the journey of getting funded, it does not have to be a hard one or an insane one. It's going to be hard in regards to the work that you're going to be doing, but notice that once you have the system, once you've worked out the kinks of your system, once you've figured out what you're going to be doing, it becomes very clear what's required of you. Okay, so let's keep going here. Again, there's nothing for us to move yet. If it moves higher now, just like that, we can easily move to break even. Like there's no reason we shouldn't move to break even, right? So there we go. We're at break even. Now, do we have a reason and a way to to manage yet? No, we don't, right? We have, just to show you guys this, we'll make this black for now, right? Just to show you, we have this low and this low is back down here. So there's nothing for us to edit there, okay? So I can't change anything right now, but as far as we know, this trade right here passed the mentfunding evaluation already as is, right? Because your profit target was simply hit. That's the end of the story. So if you're in the process of getting funded, your profit target is now reached, right? You've done the work. You use the screener or the sentiment viewer or just what you've learned here, and you've established that you have a bullish market in front of you. And great, that's established. You've also established with a few time frames where that market is and if it's ready to start making a potential move. And once you've done that, you've stepped down to your validation time frame and then your entry time frame to find a trade. And if it presents itself, which it now finally did, you take in the trade and you simply played out that trade with your simple rules, and following those exact rules led to your equity high being beyond the 10% profit target. So after one step of this, you're funded now, right? You officially go past you do your thing. But now let's continue and see where we end up just by following our rules. So we wait for some kind of low. Okay, we get one. So we get a low here. You can see if I zoom in, you can see it hopefully on your charts, but there's a low right there that was created, which means that our stop can go right here. Simply draw it out and we continue managing this trade. Comes down, comes up. It's not waiting for another, just like that. So another low forms right there. You can see it right in front of you. So we'll move our stop down here. Great. Okay, and it stops us out. Phenomenal. And it stops us out for a 5.32 RR gain. Now, I'm no mathematician, but I'm pretty sure we just passed the mentfunding evaluation just with the trailing rule. So we had -1, break even, -1, plus 6.89 on the first nice trade, plus 5.32 just now. Sorry. So it becomes 4.89 plus 5.32. Yeah. So we just passed the mentfunding valuation with the rules as well. So we've actually made 10.21% overall. Valuation, or not even valuation, funded phase, total up 10%. Right, we just made 10% on our account in a few minute sessions of trading. Now, I want to bring your attention to something else that's really, really important, okay? And that is that we started looking at the market, if you guys remember, around here, right? Let's go back to a 1 hour just to see where it was. I forget specifically. Yeah, so we started watching the market around here. Yeah, around here. So this has been about 10 days of price action that we've just tested, kind of, and looked at and forward tested, live tested, whatever you want to call it. And the trades we took were just inside of this area here, as you can see, just using specific and simple rules around the multiple concepts that are taught on this channel and privately, okay? Now, what's cool is, what I want to bring your attention to is notice how much price action we didn't trade, and that it wasn't some mysterious random tool that I threw out there and said, guys, we're just not going to trade any of this. Notice how we had simple rules that kept us out of all this price action here, right? Until we started seeing upside movement and the trend continuing as to what it was doing prior and what it had shown us and proven to us that we were going to do. Okay, now one more thing I want to bring your attention to. So this was the start of our test. This was the end of our test. I just want to show you that we also didn't cherry pick a random moment, right? We went back based on a random time and everything like that. But please take a look, okay, at everything that happened beyond that moment and prior to that moment, okay? Now my question to you is, if I'm able to pass an evaluation in this price here, do you think it'd be possible for you to do similar in any of these moments in front of you? And I hope you start to see firsthand that you are not limited in any way by the opportunities this market presents. You are only being limited by your own potential ego and your own need and greed. That rhymed. Your own need and greed to be a trader by taking trades, rather than be a trader by doing the things required of you, which is to show up when there's actually a clear market condition, a clear context within which you should be trading. All right. Thank you.